Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Thursday, everybody. We're seeing our post initial claims reaction here, and let's go take a peek at what we saw immediately following that release at 8:30 this morning. So, quick peek at the 5-minute chart of the S&P. You can see that crazy wick at 8:30. But we've been heading lower since 8 a.m. and that hot zone did nothing to change the trajectory of what was going on with the S&P. Taking a quick peek at the 5-minute chart of the 6E, same 8 o'clock ish topping phenomena. This 6E is telling us that the U.S. dollar is stronger. This is an intraday look, by the way, so a little bit of strength in U.S. dollar, and then rounding out a look of the market, kind of the market pulse, if you will, is chop on ZB. So while the dollar is strengthening, yields are not strengthening alongside that. In fact, we just have a lot of chop here on ZB, and in fact, if anything, you take a look at the daily time frame, we're above that line in the sand, gang. ZB is trading above the previous session close. That is a very important level to keep an eye on. So that's what we've got right now when I take a look at those three key markets: S&P, 6E, and ZB. So broader look at the averages, look at the US dollar, look at yields. Now, if we want to get a little bit more specific and take a look at the NAS, we can see here NAS is pretty heavy. Not surprising, because if we're thinking about Q2 rotation, and this is a video I did now about a week ago, Friday, I believe it was the Friday video a week ago, just about a week ago. And the idea was, as we turn the page, as we have a sort of new look at a fresh quarter, 90 whole days before money managers are going to be graded again, right? That next report card. Now they've got time to look at things at sort of these bargain basement prices. A little bit of bargain hunting or even bottom picking season, but this is where names like XLE and XLV are really starting to shine. This is where we start looking at where that rotation has been happening, relative outperformance, if you want to just keep the rotation out of it, which is going to need not just certain sectors to move lower, but other sectors to move higher in reaction to. I think too much is oftentimes made of rotation and not enough of just straight up relative performance. This week, utilities and staples. So there is a defensive approach to the last 5 days or so, where you'll see defensives, XLP and XLU, near the top of a 5-day relative performance list. You'll also see XLE up there, and you'll see XLV. And very steadily, you're starting to see even glimpses of XLB basic materials. So that means staples, utilities, healthcare, basic materials, and energy, XLE, doing pretty darn well as we start this new quarter. And today, remember, is technically the last trading day of the week. I say technically because despite the Good Friday holiday, non-farm payroll is still going to be released tomorrow at 8:30 Eastern. And that's a quirky, high impact, right? It's a quirky release because it's a very high impact number, especially when you look at the way in which most earnings expectations are a little on the arguably inflated side, because the last 6 to 9 months, the last 2 to 3 quarters of non-farm payroll have been so darn steady and strong. As always, gang, if you have any questions, feel free to type them in. This show is about your questions. Before I get there, a little housekeeping. If you haven't checked out the free resource known as the Countdown Trader, please do, because after we finish up Charts and Coffee, if some of the lingo that I used or if some of the concepts that I've mentioned you're not really familiar with, you can check out countdowntrader.com. And it's just free, right? How I'm trading this uncertainty. We've talked about day trading. We've talked about swing trading, decoding monetary policy, a lot of things that will be excellent additions to our conversations here every weekday, Monday through Friday, for Charts and Coffee. And of course, the Raghee Report, which I'm just calling This Week in the Market now to supplement the reboot of the This Week in the Market newsletter. I should have that trial link for you all very, very soon, so you can see what we're doing there. And that's going to be on Sundays. We have our live show at 6 p.m. So lots of updates here for you all. Let's get to the questions. And we've got a question from our training room. Hey there, Pete. What's my opinion about Lyft? Okay, let's jump on in. So the time frames that I have on this screen right now, gang, are the 5 to the left, the daily in the center, and it's the weekly on the far right, by the way. So if I take a look at Lyft, gang, let's take this giant hole in the chart out of the equation just for a moment, because a lot of times we can make too much of a gap. I know a lot of folks talk about gaps closing and gaps. I love gaps. They're just another way of looking at support and resistance. But let's take that out of the equation. That happened in February, right? We can see that happen on the heels of earnings. Of course, with a move from, say, 18 down to 11, that's probably going to go ahead and adjust all the moving averages in such a way that we're looking at this as a downtrend. But the real question for me is, before earnings, before that February earnings release, what was Lyft doing anyway? I mean, do earnings really make that much of a difference? They really often don't, gang. There's not an earnings typically, right? I'm talking from a probabilistic standpoint. If we look at 100 earnings releases, what, maybe 5, if even that many, completely change the trajectory of a stock? It's probably not even that many. Most of the time, earnings will add volatility. And in a choppy market, it's more choppy volatility. In a downtrend, I mean, look at this. Has there been a reason to be bullish in Lyft since February of last year, since February 2022? Now, I don't want to be salt in a wound for anyone who is long right now, but I do want to point out very simple tools, visual tools that we can look at to say, well, what is the structure of the weekly or the daily? And we did have that big move lower on earnings, but the bigger story is this is a well over 1 year established downtrend. And really, we really haven't had much of a reprieve other than a very small period of about 2 weeks at the end of January. And so I've still got to remain, my opinion, for those reasons, Pete, is still very, very much bearish. Okay. Hey there, Earl. Oh, I love the question on GE. All right. Euro dollar. Love it. So euro dollar was one of the commodities I used to love to trade when I was a very, very young futures trader. Biggest market in the world. I don't know if that's still true, but it was the biggest market, or one of the largest markets in terms of open interest and volume. And really interesting when you look at GE, or whatever the new symbol is ultimately going to be. Let's see. Do we have? Yeah, I still have data going into April. All right. So if you take a look at what's been happening here, this is the way that I'll look at GE. All right. And this is actually the same way that I would look at any. So first of all, what is the euro dollar? So the euro dollar is the interest rate that any, say, US dollar gets in a European bank. That's all that it is. You take a US dollar, put it in a European bank, what kind of interest are you going to get? It's really any foreign currency, I suppose, at this point in a European bank. But back then, that's the way it was explained to me. It was also explained to me, well, what do these numbers mean, right? What do these numbers mean? And again, if you're going to continue to watch this particular symbol, I don't know why we named it like a robot from Star Wars, SR3. I mean, that should be a robot from Star Wars, no? So apparently the GE is going away, and SR3, which is apparently C-3PO's second cousin. I don't know, but that's what's gonna be the upcoming symbol. But nonetheless, we do have enough data here to make some easy understanding of what it's doing. Imagine taking 100, right, which would basically be 0%, right? 0%. You see here 94.85. So you would subtract 94.85. That is what the percentage is. So as this moves lower, right, the percentage is doing what? It's moving higher. Not that dissimilar to the way that we would read, say, the ZB. As TLT or ZB futures move higher, that's yields moving lower, right? So we always remember the yields and the actual chart can sometimes differ, and that's what I mean with GE. So as this moves lower, as this chart moves lower, yields are moving higher. And just do that simple arithmetic. I'm still very bearish here. Remember, the ECB is behind the US in terms of their tightening cycle. And so there's a small likelihood that there will be a window where the US is holding, if not cutting, and the ECB still might be at the tail end of their hawkish cycle. And I can't be a buyer quite yet on the daily. We'll keep an eye on it, though. I don't know if you're looking long or short, but I love looking at things like this. So just to give you an idea of what this is, I love futures. I love futures contracts. They make me a better ETF and stock trader as well, because we get this more complete look at this world of symbols that we're trading. All right. So let's go ahead and take some questions from our YouTube channel. Mr. Walker is asking about the 5-minute chart of the Dow. Sure. So let's put our day trading hats on for a moment. Now, I don't know how many of you are still looking at day trades. We certainly are in the Sector Secrets Mastery and in the futures room. Day trading the first hour after the bell is continuing to be exceedingly effective. And it gives us a really nice, nimble way to trade this current environment. What are the tools on my screen when I am day trading? Primarily, I want the automated levels of volatility, right? I don't need another price-based tool. Got plenty of them. I've got my Darvis 2.0. I've got a slow stochastic. I've got the wave. I've got grab candles. What a lot of traders need to do is ask themselves, do I really need another price-based way to understand where support and resistance are? Or is it time to look at time? Is it time to look at volume? Is it time to look at volatility? A couple anchored volume-weighted average prices are a great step towards more volume understanding on a chart. Adding the V-score is one of the most effective things you can do. And then start adding volatility. Now, there's only one way to add volatility, really, that I find is specific to historical volatility, and that's the HPMRs. Now, I'll put those HPMRs on there. And so when I look at the Dow, let's start with structure. That's the multi-trend, right? That's the two band of colors at the bottom of my screen. Love these things. I'd be lost without them. Red over yellow for the most part, bearish momentum, neutral trend, which is trying to go bearish trend. So, Mr. Walker, this is trying to get bearish. By the time we get to the open here in about 6, 7 minutes, we might be in a downtrend on the Dow. Really important to look at then, what are the sectors within the Dow doing? Which sectors are leading the charge to the downside? Is it financials? Is it tech? Is it healthcare, transports, industrials? Look at those 5 sectors to know what might be that bearish, leading that bearish impact. Now, that doesn't mean that the ES and the NQ are necessarily doing the same thing. ES is going to be more susceptible to that weakness in the Dow than NQ because of so many of those shared sectors, namely financials and healthcare. So if Dow is heading lower and NASDAQ's heading lower, S&P's got no choice but to follow along. All right. So let's see what else we have here. Sergio says a coffee a day, right? Charts and coffee a day keep the grumpy away. Yeah, I'd like to think so. I've got my, what is this? What's it say? Black coffee, master of vitality. Yeah, that's what I'm rocking today. Little black coffee. All right. Mark, euro dollar is dropping on my 15. Yeah, if we're looking at euro versus US dollar, yeah, I'm with you. The 6E continues to move lower. That means US dollar is going to continue higher. Yeah, absolutely. So follow-up question on Lyft. Sure. Hey there, Pete. So let me do this. You're talking about there's some 421 expiry, 12 and a half. Does that mean anything? So here's what I'll do. You see, I've got the TradingView charts up now, right? I'm going to go to Lyft on TradingView here. All right. And then I'm going to open up the daily time frame a little bit more. Let's squeeze in some data. We can go to just the 23rd. Actually, let's zoom in versus zoom out. So this is Lyft over just the course of 2023. What I would say is, sure, options liquidity is very valuable to understand. And then what I'll say here is, how about we supplement that with where we see the shares being traded. Where are those transactions happening? This is the point of control right there. That's the most amount of trading has occurred in Lyft at $10.50 since the beginning of the year. That's your point of control, right? Which is obviously still overhead. We have another layer of support down in here, and that price level is about $9, right? So we have that support around the $9 area. And then that's where the battle's happening. That's where the volume is. Volume tells us what has already happened. We know people are looking at I'm up or I'm down based on where they're long from, right? So you probably have some people long and or short from 9. You have some folks that are long or short from about 10 and change. And this is what I love about volume. It tells us where the attention is. It tells us where the commitment is. And that's going to give us a really great supplement to whatever we might be looking at in terms of liquidity on the option chain. I don't know an expiring option in April is necessarily going to be that indicative to whether or not 12.5 is in the cards. I think the volume on this chart is probably going to tell us where the support and the resistance are. So if you're wondering, okay, support and resistance with volume, absolutely. This volume ledge, support. This volume resistance to the upside, which also happens to be the point of control, resistance. Why? It's absolutely in contrast to where is price, right? So that's obviously an upside obstacle. That should be downside support. And that's how you break down volume based on price. This is what I call volume ledge work. Really, really easy, beautifully done on the TradingView platform. Okay, moving on. Rainy days. Oh, some lion's mane and chaga. Nice. I don't think I have anything rainy days that's both. Big fan of both. I've got this great chaga hot chocolate. I'll take sometimes at night, and I love lion's mane. Yeah, I've got a number of sups with some lion's mane in it. That's fantastic. All right. Let's see here. Bear with me, gang. What are my thoughts on Amazon this morning? Sure. Let's stick with TradingView, shall we? Okay, daily chart, TradingView. Now, you notice here on TradingView, I also have my daily price movement ranges, my DPMR. So I know where those volatility zones are. Couple really important things on this chart. Number one, the 200 propulsion. Where is that 200 EMA? The resistance, volatility-wise, this is the DPMR resistance, historical volatility. Here's my support, historical volatility support. There's my point of control, basically for 2023, right? You can see some volume ledges of support also in this area as well. Very interesting look at the daily time frame of Amazon. So the question is, okay, Rog, that's all fine and well. What do you want to do? I want to be a buyer. I know that Amazon's been lagging a bit. I know that XLY hasn't been doing great, but I'd rather be a buyer. But here's the thing. The question is always, directional. Yeah. Okay, Rog, you want to be a buyer. But the follow-up question is always from where, right? From where do we want to be a buyer? And that's where these DPMRs coupled with some volume ledges. What is that? That's volume and volatility. Gang, this is not relying on price alone. Most traders are seeing a very one-dimensional look at the market. If you ever have an indicator and you can look at your group of indicators, this would be a great, believe me, gang, I would not send you down some rabbit hole. If you can at some point, maybe this weekend, got a long weekend coming up. If you can sit back and ask yourself, of all your indicators that you're putting on your chart, of all the indicators you have or created or bought, whatnot, does this measure things based on time? Does this measure things based on price? You're going to find probably all, if not most, of your indicators are price-based, which means they're all looking at the same thing. They're taking open, high, low, close and doing some sort of arithmetic formula around that. Is it based on volume or is it based on volatility, right? If you can categorize all that, most traders will find, as I did decades ago, I'm very price-based, therefore one-dimensional trader. We want to be 4D, gang. Price, time, volume, volatility. And now you're seeing the depth of what's going on. And so that's what this is on Amazon. We're going kind of 4D on this, not just price only, but what's happening in terms of volume and volatility. All right, gang. And just like that, shows up. I will see you all tomorrow. Yes, tomorrow's Friday. I know it's Good Friday, but we do have non-farm payroll. I am planning on doing a YouTube session for non-farm payroll starting at 8:15 Eastern. So I'm going to be here on the YouTubes, 8:15 Eastern to 8:45. Then we're going to roll into our charts and coffee, and then we're going to call it a day. All right, there are some important hot zones. I do want to share with you all what's going on, how I'm going to be guiding the folks in the Sector Secrets Mastery Room with whatever we learn from non-farm payroll tomorrow. And then really what I want to do is stress test the heck out of our HPMR. So a lot of you saying, Rod, can we day trade in this environment? We're going to use our hourly price movement ranges tomorrow to take a look at non-farm. All right, gang, that's it from me. I'll talk with you soon. I'll talk with you tomorrow. Be good to each other.